Congratulations, you made it through week one, and I'll spend a couple minutes just wrapping up some of the key takeaways for the week. One of the more interesting things we did this week was look at the balance sheets to try to figure out which company was which. The Dow Yahoo comparison, most people honed in on the fact that they expected Dow to have more inventories, and PP&E. Yahoo doesn't even have inventory, so that pretty easily identified company A, as Dow. You should also note that Dow carries a lot more debt. Their cash flows and earnings are probably a little more predictable and stable, allowing them to take on a little more financial risk. Yahoo, in a little riskier business, is not going to carry as much debt. For Citibank and Nike, this was pretty easy, I think. Again, Nike has inventories, and Citibank has a lot of short-term assets and current liabilities. All their financial assets and liabilities tend to be current in nature. They also have a lot more debt in their capital structure, given the fact that they're a financial institution. So that's pretty typical of a bank. So company A is Citibank and B is Nike. And then Apple and Walmart, maybe not quite so clear, but most people honed in on thinking that Walmart would have much higher inventories and PP&E, or property, plant, and equipment, as we say, which is company A, and that is Walmart. The other thing you notice about Apple is they have very high short-term and long-term investments, which is the result of all the cash they have on their balance sheet, over $100 billion of cash, which they invest in the short-term and long-term investments until they find other uses in their business. So the key takeaways I want you to have for the course are: one, how a firm's strategy or business model can be revealed in the financial statements and in the balance sheet in this case, and we saw that with the three pairwise comparisons we just went through. Two, that the balance sheet equation is a very powerful tool. We can use that to record all the firm's transactions, and we'll be continuing to do that in week two. And three, you really need all three statements to tell the complete story about a firm's performance. You can't just rely on the income statement. You need the balance sheet and the statement of cash flow to get really a complete picture of the firm's financial performance.